Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of June 9th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was a roller coaster ride for mortgage rates. They actually started moving higher in the beginning of the week. Take a look at the bond chart on the screen. You can see the red candles down and the arrow, the downward trend for mortgage rates to start the week. But then on Wednesday, we were able to hammer out a bottom, and they turned green, which means they turned positive. So mortgage bonds were able to recover to end the week. So we're going to recommend cautiously floating your Delaware mortgage rate to start the week to see if bonds can continue on this upward trend, which means rates could move lower. So cautiously floating your Delaware mortgage rate. Now let's move into the economic news that we saw last week. Big report was the jobs report for May released by the Labor Department. Came out at 217,000 jobs created. Now that was down from 282,000 jobs in April. So not a great number there. Unemployment rate stayed the same at 6.3%. And that's the lowest. We haven't seen that low since September 2008. But the labor force participation rate, the LFPR, stayed the same at 63.2%, which is a 35-year low. Now, the FFPR measures the number of people 16 years or older eligible to working that are actually working. So that's a better indication of the labor force. The unemployment rate, as we mentioned before, does not count you if you stopped looking for work or took part-time work. So that number is misleading. We really need to get that LFPR number up to have a meaningful recovery in the labor market. And then on Thursday, we saw the weekly initial jobless claims came out at 312,000 claims. And then the previous week was revised higher from 300,000 to 304,000. Now, that's still a good report. Anything close to 300,000 jobless claims is a good number right now with where we are in the economy. We don't want to see it to move higher. We want to see it to keep around 300 or even break below that if we can. And that would bode well for the labor force. And then in housing news, CoreLogic reported that home price increased 10.5% year over year from April 2013 to April 2014. And we had a 2.1% increase in home prices from March to April of this year. That's up from 1.4% from February to March. So good news in the housing market. That spring recovery we were talking about, looking for the housing market to pick up in the spring, that has started, that has begun. So we're seeing the appreciation come back. Now, it's not the big appreciation we saw last year, but this is a sustainable number. 2.1% month to month is a good number. We can sustain that. Even 1% is a good number. It'll sustain it over time. Those big numbers we were seeing last year just weren't sustainable, as we mentioned. But we're into the spring market. We're going to go into the summer market. We're going to see good price appreciation. Now, if we look at the local news, the next free first-time homebuyer seminar is actually this Saturday, June 14th in Dover, Delaware, from 10 a.m. to noon at the Dover Holiday Inn. And then the next one in Newark is Saturday, June 21st. That's from 10 a.m. to noon at the Christiana Hilton Hotel. You can register for either one of those events by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.